Now, this is another example, the same currency pair, but this time we are looking to look for entry using a slightly higher time frame, which is a 5 minute time frame. Just now we use 1 minute time frame to enter. Okay, so now this is a 5 minute time frame entry and see what's the difference. The same thing, we are looking to enter when the price come back all the way to fill this gap. This is the ERC, the price already came back to fill the gap, right? And we are looking to long because on the higher time frame, the daily, it is in the uptrend, the price coming back. So we'll expect price to go up higher to at least to test here. Okay, that is our expectations, right? Uptrend price pull back to this demand that we are interested to go long. Okay, so that's a daily time frame. So now we go to 1 hour time frame. In the 1 hour time frame, this is what we see. Okay. In this a blue zone is a daily time frame zone. Now in a smaller time frame, we have another. You can see price move lower. Price move lower. Let's make this lighter. This stop loss below here. Price get stop out and price move higher. So this is the demand that we looking for long. Right. So now we have this is a 1 hour time frame. So both the daily and the 1 hour time frame telling us that price is in a level that with potential we're going to see a bounce. Okay. So let's see. And with this, we identify our demand here, which is the base of this ERC. And we expect a price to bounce here. We might not necessarily expect the price to go to all the way up to this level, but at least minimum, we can see a bounce. A bounce meaning to say that price might just come down, bounce before it go down, right? So we try to capitalize on this move. Okay, we have a multiple high here. So if we are looking for long here, our logical target is going to be here because it's a multiple high, right? So there are a lot of stop loss here. So if the price want to go lower, it is quite logical for price to come back up to grab all the stop loss before it go down to test the low here, right? And then before it go up. Okay, so now we try to capitalize on this short move in 1 hour. Let's go to 15 minutes time frame or 5 minutes time frame. Just now we say 5 minutes time frame. Okay, so in 5 minutes time frame, we can see that it is still in a downtrend. The market continue to make a lower high, lower low, lower low, low high, low low. So until now, no opportunity yet because it shows that it is in the downtrend in the 5 minutes time frame. Okay, price start to show it go consolidate. Okay, break. Now we see a price start to break with this. We have two break actually. One of them is this ERC break above this high, right? So after this ERC break, if you are in front of a computer, you might already enter on the pullback to this. Okay, this could be your trade already. Enter, and these are all the multi high. So we are going to take profit at this high here. Okay, so that could be a first entry. Now, if you miss this trade while you step away, let's say example, you step away. Now we have another break. See, this is another ERC break. So we have a range here. This is the high. I think this is the low. And this is the break, right? So if we can always put our buy limit there on the break, on this break. Okay, or 50% of this range, which is around that 50%. Right, 50% of the high and the low, the range. This is the high. This is the low. So 50% is around this area. Okay, so we put our buy limit here and see whether price come down. And our take profit is going to be the same here. Stop loss, same below the low there. Okay, order trigger. Our order trigger, price will go up, target hit. Okay, So this is another entry. So I've shown you the two type entry, right? We can use a 1 minute time frame to enter, where we see a lot more detail, or with 5 minutes time frame to enter, which equally we can see there's detail that allow us to get into the trade. I mean, the pattern is there for us to get into the trade. Okay. Now, if you go to higher time frame, example 50 minutes time frame, you might not see the detail anymore. You can see that the break happened in this candle, but after this candle, we don't. How you can enter? Well, you can enter here and stop loss here. You still can, yeah, because the next candle actually the price came back down, but it's not so clear. Right? It's not so clear. So now, if you miss this one, you can see that there isn't anymore. And the second entry that we actually enter here, you don't see on the 50-minute time frame anymore. Okay, you don't see that but in a lower time frame, we do see, right? Example, we go down to the 5 minutes time frame, right? We have two entry, which is quite clear. The first entry is this one, price pullback. Now, second entry is this ERC, and the price pullback. So you enter, right? So we have one entry, two entry. If you go down to 5 minutes time frame, but if we go one time frame higher, let's say enter trade on the 50 minutes time frame, we don't see. Maybe we see this one here, and it's not very clear, not very distinct. You can see this green candle is right. So whether you go in or you again not ideal, because you don't see that kind of convincing close in 50-minute time frame. But in time frame lower than 50-minute time frame, like 5 minutes or 3 minutes or 1 minute, we saw the opportunity very clear. Let's say take a look at the 3 minutes time frame. Again, the opportunity it is very clear, right? Two opportunity to enter. The first one is this one. The second one is this one. Okay, this is 3 minutes time frame. Okay, so that is why I think that to pick our entry, the time frame for us to pick our entry. Now, once you identify our point of interest, our demand, where price is going to react, right? Now, if you do not want to put a buy limit, set and forget kind of entry, then and you want to monitor the trade, right? And I would suggest that you might want to consider to go down to 1 minute to 5 minutes time frame or 3 minutes, right? Try to enter the trade on these 3 time frames. I think you will see a lot of detail that we miss out. If you look at a 50 minutes time frame or above for entry, you might not enter, you might not see all this. And then say, okay, I missed a trade. But actually, if you go down to a lower time frame, you don't miss a trade. Okay, so I hope that this is helpful to you when you come to enter your trade.